Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elkanen.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to this Thursday, Ides of June edition of Benzinga's PreMarket Prep. I'm Spencer Israel, as always, joined by Joel Elkanen and Dennis Dick. So we're live on YouTube like we normally are and on premarketprep.com, but today we're also live on Facebook. If you go to Benzinga's Facebook page, facebook.com/Benzinga, you can like us on that page and get notifications right when we go live, which we are right now. So we're on Facebook as well, so welcome us to there by liking and commenting as well. On the show today, we're going to talk, of course, oh man, sell-off, it's happening. Financials getting rocked, tech sell-off again, more Trumpness in the market. And then we're going to talk about the follow-through from yesterday's Fed meeting with our guest at 8:35. That's Evan Schnidman. He's the founder and CEO of Prattle. He's going to tell us exactly what the Fed statement, what did it really say? What did it really say? That's what he's going to tell us. So that's at 8:35. But before we get to that, we got to get to this market. Joel, what's going on this morning?
Oh boy, S&Ps are down 17 points now. I looked at it as a technical sell-off early. We bounced off the midday low yesterday. Closed kind of strong, but couldn't hold the close, and then you get the investigation of Trump, and down goes the market. So here we are, 1850. I have two good levels for you to be looking at here. You had Monday's low at 1675. That's holding up, 1650 the low. After that, you got the 5-day low at 2412.50, and I don't even have a number under that. So we'll have to take a look. Maybe 2400's on the radar today. You have crude trading down 36. Crude's in danger here. We've been in a trading range. We did have a quick blip down, I think, 43.96 a couple weeks ago. Now moving in on the $44 level, so we'll see if OPEC can come to the rescue. And the reason Dennis and I really don't invest in silver and gold, because if you're looking for a safe haven today and you have some gold shares or gold stocks, down $19 at $12.57. Silver down 40 cents at $16.70. Dennis, did we go from a buy everything market to a sell everything market?
This morning we did, and it's really interesting here, and you're making a good point. Before we jump into the individual stocks here, let's just give you what the catalyst is here. Last night, after hours, Trump news. Spencer, do you have the details?
Yep, Trump is being investigated by Special Prosecutor Robert Mueller for obstruction of justice. Now, this is a little bit different than what it was before, where the people around Trump were being investigated for various ties to Russia, but we never had before yesterday actual news saying that he was being investigated for a specific crime. Now we have that news yesterday. He's being investigated for obstruction of justice. Again, not saying he's guilty or not guilty or it will lead to anything, but the fact that he's even being investigated is apparently enough to spook this market.
Yeah, and on that news last night, they started hitting the techs and they started hitting the financials. And if you look this morning, that has continued right here into the pre-market. It's the same stocks that are the weakest here this morning. So you can go and you can look at your Goldman Sachs trading down over 1%, your Morgan Stanley trading down 1.7%, Bank of America trading down 1.5%, Citi, JP Morgan, Wells, all trading significantly red. So they're hitting the typical Trump stocks. The other thing they're hitting is the techs, and it's, right there, those are the ones that have been the most volatile, is the momos. And if you look at the main guns there, obviously, you go to your Nvidia, it's down 2.5%. You can go over to your Microsoft, it's trading down 1.3%. You can go over, just your Qs overall are down significantly. They're down almost twice as much as the market, trading down 1.1%. But, then you look at your Google. Google's getting beat here this morning, too. It's down 14 points, actually getting downgraded here at Canaccord as well. So that's not helping Google's cause. Tesla stock that seems to be up every single day. Look at this. Hey, Tesla's even down here in the red today. We're down 7 points on Tesla, 1.8%. So Momo became the no-no, became the Momo again for a day, and is now back to the no-no, Joel. How do we interpret this choppy action in all these Momo stocks?
Wow. Well, just going back and just taking out Trump, taking out, whatever's going on in the market, all your stocks, look at Friday's low. And I don't know if we hit it yet. We haven't hit it in the S&Ps yet, which is 1250. But a stock like Apple, that's the level I'll be keying on because it did not trade down at those lows very quickly. We had a major rebound. Let me give you that low here in Apple that was Friday that you had the tech wreck, right? And the low, we haven't even come near it yet. We haven't sniffed 142.51. Oh, actually, we're 50 cents away from that. So that's a key level. Also, just look at your other stocks and look at the lows from Friday. Those are key levels. We're going to be down there quick. We rebounded hard off it the first time, so perhaps we'll get the same reaction again.
I mean, that's a great point, and that's what you got to look is a lot of these things are trading kind of technical here still. It's not individual stock news. It's the overall market moving these stocks here right now. So I agree with you, Joel. I'll look at that NVIDIA and look down at that 142 where we put the double bottom in just from Friday and Monday. And then you can look even over at a stock like AMD. Well, AMD got down to 1127. It's trading at 1145 here right now. So we're right there. That was a low from Monday, actually, because we had a little bit of the follow through whoosh on Monday. Some of these actually made new lows on the Monday itself as well before the buyers came in. Microsoft is significantly higher than its low, though. Monday it got down to 68.13. It's still trading up at 69.31 here right now. So those are the levels that a lot of these stocks need to hold, for us to start to get back into bull mode here. But I'll tell you here, this is spooking the market overall because you had the South, and a lot of people were digging back in saying, okay, that was it. They were even saying last night on CNBC that might have been the bottom here in all these, Momo stocks, and these things are eventually coming back to the highs. Well, now you get another whoosh here, and you get some Trump concerns. We know what the market has shrugged off a lot of things, but it has still been concerned about Trump. You can remember, what was it, 2 weeks ago when we had that 300-point down day? That was Trump concerns as well. Maybe it's 4 weeks ago. I might be dating. I lose track of time here with this market, but you've got to be careful with Trump news. That is market moving. So they might be shrugging off some of these terrorist attacks. They might shrug off, some of the numbers that are coming out, the economic numbers, but they do not seem to shrug off the Trump stuff, and they're worried. And if you're in the financials here, the financials are worried as well because they're Trump stocks. They're looking for deregulation there. If there's any issues with Trump, then obviously they're thinking, okay, well, it's not as much good news. I really thought today we'd be talking about the Fed, but it seems like we're going to be talking about Trump again.
And Dennis, I know we talked kind of late last night, and you were looking at a potential rebound, and you were doing a little nibbling and hedging and stuff.
Yeah.
How did that work out? I know you were kind of.
Well, I started nibbling when we were down 7 in the S&P. That was obviously didn't work out. The only thing good is I was short a bunch of tech stocks against some of it. So it's actually working out because the techs are down so much. It's making up. I was a little bit net long on the S&P futures versus some tech stocks, and obviously that's just working out because the tech is down twice as much. So I'm getting a little bit lucky there because I was actually I wasn't bullish last night, but I wasn't full on bearish, and I should have been, I guess, full on bearish. I started, I did actually start shorting stocks on the Trump, but when the S&P futures fell 7 points, I was like, maybe that's enough. I started covering it, and I actually closed out my night position a little bit long, which was a mistake. I should have stayed obviously net short, and I'd be really laughing because another 10 handles come off here. But there's always, that's about hedging. I was mostly hedged, so that's what I try to do in my own trading is when I've got stocks on, I'll put SPY on or Qs against it, depending if they're tech stocks. I usually hedge them with Qs. If obviously there are other stocks, then I'll hedge it with SPY. But that's the consideration. But another point that you made here, Joel, is it's typical when we're down 17 handles that you'll come in and you'll actually see the TLT trading significantly higher. You'll see gold trading up. You'll see the defensive stocks trading up, and we're not seeing that today. I'm not seeing hardly any green on my screen, which is very weird. I'm looking at 200 stocks here right now. The two that I see trading in the green here right now, well, one is UNH, and one UNH is ex-dividend, so that's not really in the green. And the other is Newmont Mining, and I believe that was a recipient. Was that upgraded today? NEM?
Let me see here.
I thought I saw fly-by ratings. Spencer, you might have my back on this one.
Spencer is working frantically here. Raymond.
I think it caught a downgrade or an upgrade. Oh no, initiated coverage. Raymond James outperformed. So a little bit of bullish analyst stuff maybe helping Newmont. But even like Barrick Gold trading down, Agnico Eagle Mines trading down. That's weird. So this is, right now, and we're very early. It's 8:12. These trends could reverse. They might come in and just start buying the defensive yield stocks again here. But as of right now, this is one of the first days that I've seen this year where everything is red. And, that is, what we've been saying on the pre-market show. Until we start seeing people rotate out of stocks altogether, then, you're probably not going to, this, isn't, the start of a new, like, bear market or correction. This day is different, though. Right now, as of early here, everything is selling off. So that's what you need to see if you've got a bear case here.
And also, you just want to take into account, the buy the dip mentality worked, right? On yesterday, you had the big sell-off off the Fed numbers, buy the dippers, boom, picked it up. They were looking good at the close, and then kaplooey. So people are going to be stuck on those positions. I think you'll see some more downside action. Then you'll get other people coming in and say they didn't buy the dip yesterday, say, oh, this is the dip to buy. So you got to watch out for those initial flush outs. Once again, the number of the day, S&P futures was your low from Friday at 24,1250.
Normally, you would see food stocks trading higher here this morning, too, or at least trading flat as the money rotates out of momos into defensive names. But you've got Kroger weighing on the sector problem here because Kroger came out with earnings here, KR, and they've disappointed. Kroger is trading down almost 10%. That's a huge move down for KR. Spencer, what happened?
Well, Joel's pumping his fist in the air. I'm not quite sure why. I guess we'll find out. But they reported Q1 EPS of 58 cents is in line with the estimate. Sales of $36.3 billion versus a $35.77 billion estimate. So they beat the sales estimate there. They did cut their GAAP outlook, however. And they cut their EPS outlook for the year. It was $2.21 to $2.25. That was the range. Now it's $2 to $2.05. So they cut their their fiscal year EPS by about 20 cents.
Not good news here for Kroger Longs. This is taking out major support levels, and you had a lot of support in the lower 28 handle. If you look from March, April, and May, you can find lowers or multiple lows in that 28 handle here. Now we're trading the 27s, so we're cutting through all that support. I mean, I don't know, Joel. What are you thinking here?
I'm thinking I'm pretty happy.
Why are you happy? Are you short it?
Did you check your Skype last night at all? For my earnings?
No, I haven't yet. I've been trading. I've been too busy trading.
I sent this yesterday afternoon, and you responded to it. I said an earnings hunch. Kroger going.
Did you buy puts?
Yeah.
What'd you buy?
They're too close to the money to tell you.
You buy 27.5?
28s.
28s. What do those cost?
Not too much.
So you're talking. You're probably well into the money here. So
we'll see. We'll see. Just full disclosure.
Oh, that's an outside bet. You were really betting that Kroger was going to miss big time here. Good bet.
Yeah, it's just what they did with the Krogers in our area, and a store that they replaced. The one that they replaced was a really good, nice store. They bought it out and then they closed it 6 months later. Is what they did, and we just stopped shopping there. We do the Meijer shipped and Costco. So my spread is short Kroger by Costco.
I mean, I can't argue with buying Costco because that store is so busy. Whenever I go in there, you can't even find a parking spot a lot. It's unbelievable. I don't feel like they could have two stores in this city. I'm in Windsor, but they probably could just add more stores because these things are busy. I bet you they lose customers just because people look at the parking lot and they say no. So that's just a phenomenal business.
I saw a tweet. I saw a tweet over the weekend. I saw a tweet from Quoth the Raven, popular Twitter handle.
We've had him on the show.
We've had him on the show.
We should get him on.
He tweeted. He was at Costco. He tweeted a picture of the line at Costco. It said, "Buying cost on Monday, regardless of the cost." Like he was in line in Costco and was like, "I'm buying the stock on Monday. I don't care how much it costs. I'm buying it." I don't know if he actually did that, but it was funny because I mean, it's the same sentiment. That store is never not busy.
It's never not busy. You can go in there on a Monday afternoon. Like, don't people work? No, they're all at Costco. Everybody just works at Costco. Everybody just goes to Costco all the time. It's unbelievable. That store is, and that's the one regret I have back from when we had the flash crash. Remember we had that flash crash back,
August,
what was it?
August 2015.
There you go. And the stock went down, go out to your monthlies. That day, Costco traded down. You can see the little blip on the chart to $117. And then it was like back in like a week. It was right back up to where it was at 145. I mean, that was the best opportunity in that whole flash crash scenario. A lot of stocks went down there, but man, that Costco was cheap back then. And obviously not a lot of stock traded down there, but Costco just on pullbacks, I like it there too. And you know what? You got an argument here. Kroger, old school, it's 10%. It's down here. Is Amazon going to start eating their lunch, or is these other stocks? And I don't know. So there's definitely consideration there. And I know Costco's always busy though.
I just want to say I went to Kroger for the very first time in my life on Saturday, or maybe a Sunday, I don't know, over the weekend, and I've never seen a store where the aisles are so narrow. Like
too much stuff in the stores.
No, it was too many aisles. Yeah, exactly. It was just like it was like a single lane aisle. You couldn't it wasn't 2-lane traffic. It was ridiculous.
You know what my complaint is that, and did you see this, Spencer? If you've never been there before, if you don't have a Kroger card, you can't get the sale prices. So they'll have two prices on everything. One for either Kroger members or whatever. It's free member. You just go get a card. But if you've never been in there before and you don't have a card, you get up there to a till and you think you're buying this thing for $3. No, it's $4. You got to watch them because if you don't have your Kroger card, they charge you more for it. I think that's ridiculous.
Do you know my home phone number at all? I know you know my cell phone number, but if you go in there again...
You're giving your phone numbers on the show, Joe?
Absolutely not. I'll give it to you in Skype. But if you go to Kroger, and I never understood this, if you go to Kroger and you don't have your card and you give them my phone number, then you'll get all that discount.
That's how it is everywhere.
Yeah.
Why bother, though? Why do you have to have the card to get the discounted price? And the discounted price, though, is probably not even that cheap. So it's just their Kroger price. So if you don't, you're paying a lot more money. That's what I never liked about Kroger when I was in there. I know, a lot of people still like the store, and obviously if you have the card, who cares? But just annoying if you're not a Kroger. If you got to go get this card, and if you've only been there once, like Spencer, I got to go sign up for your Kroger and everything, Kroger card, just to get the right price.
Half and whole numbers. Half and whole numbers coming into play here so far, 27 even. That's your pre-market low. I hope that's not the low for the day, but it very well could be as you see stocks, get way overdone in the pre-market. So there could be some kind of rally. The only thing is there got to be a lot of sell stops in here at the low of the move. So maybe you'll get a little continued whoosh, down to 26 or 25 and then get a rebound. You're speaking of flash crashes. We have taken out the flash crash. No, not yet. We have. 2732 was your flash crash low in August of 2015. So regardless of what you do today, look at this stock, just a terrible relative performer since August of 2015.
All right, let's talk, and just bouncing over here to your other earnings stock. And so I lied. I found another green one. Bob Evans is trading green. Down on the farm, they had pretty good earnings, I heard.
You heard correctly. Bob Evans Farms reported Q4 adjusted EPS of 61 cents versus a 42-cent estimate. Nicely done, Bob Evans.
Wow.
Sales of $99.9 million versus $104 million estimate, so they missed the sales by a hair, about $4 million. They did, however, reaffirm their fiscal year outlook. The sales number got reaffirmed, the adjusted EBITDA got reaffirmed, the EPS got reaffirmed. So at least they're not cutting their guidance.
This is a pretty good report, and I'm going to say right now they're a victim of reporting on the wrong morning because they're selling everything here today. I bet you if they would have reported this yesterday morning, when we didn't have a 17-point sell-off, this thing would be making new highs and it'd be over $75. But this is a morning where everybody's nervous. They see a little pop, and if they might be Bob Evans, they're like, okay, good enough. I'm getting out of something green. There's macro factors here at play with Bob Evans. On a nothing day, I think the stock on this report makes new highs. Are you going to argue with me, Joel?
No, absolutely not. And I'd be bumming, if
you had calls on this, it'd be like, that's a good report. Or if you were long the stock, that's a good report, and you're getting hit because of Trump.
Yeah.
So it's up, but I don't think it's up as much as it would have been on a flat day.
This is near all-time highs, in fact. You made an all-time high. Actually, this is trading above its all-time high. I got an all-time high here at 72. Looks like 72.98. Nice round number. Trading above 73. So if you want to go with the Momo, the breakout, you hold 73. I think you're looking good here. I just, like you said, negative market factors working against the stock. For sure, I would want to cut out at the close from yesterday at 72.06 if you're looking for a couple levels.
Another example of this is Jabal Circuit, which was trading up significantly last night and has continued to leak here. They reported last night. Spencer, give us the details. It was up over a couple bucks, and now it's giving back a lot of those gains, probably because of the overall market.
JBL Q3 adjusted EPS 31 cents, that beat by 2 cents. Sales of 4.49 bill versus 4.4, so they beat that as well. Q4 adjusted EPS guidance 50 cents to 74 cents. That's what they say. 62 cents is the estimate, so they're right in line there. Sales of 4.7 to 5.1 billion dollars, right in line with the estimate.
We had a huge pop last night. I saw a 33 tick on this. Am I correct?
3309.
Yeah, 3309, and now we're all the way back down here at 3135. So it's giving back 2/3 of the gains. Reported on the wrong day. I guess they didn't report on the wrong day. They reported last night before this happened, but they're still a victim because the stock never had a chance to open with its regular trading. So another victim of Trump here.
Yeah, new all-time high. That was in the pre-market or after-hours trading. Let's see here. What your former all-time high was just made a few days ago, and I think that's going to be a relevant level today. 3170. That was your high back on June 9th on the Tech Rec Day. Closed at 3104. 3146 represents the all-time closing high. So just call 3150 here. This entire area very important for the rally to continue in shares of JBL.
Okay, so Yahoo Cajun One's just asking about that. He's saying there's going to be the symbol change this week. I know that they did close, or it is closed, the Verizon deal
Finally,
here. So
huh?
basically, Yahoo is now your pure Alibaba tracking stock because they had their old legacy operation, so it didn't track it perfectly. But now I'll tell you, this Yahoo is tracking Alibaba. So if you look, Baba's down 1.2%, Yahoo is down 1.2%. I would imagine, because he's saying, how is this going to affect price? It's going to affect price that is going to track even closer to Alibaba here now, because that's pretty much what it is. It's just an Alibaba tracking stock here now. So it was before, but it did have those other operations in there. Those are gone. So it's Baba Yahoo. So whatever Baba does, Yahoo's going to follow.
All right, let's talk about the Bobster.
Do we know what the new symbol is? Cajun One, do you know what the new symbol that they're saying it's going to be?
Well, it's Oath is the new company, right? OATH.
Is that what it's going to be? Is OATH?
That's the name of the company. I don't know what the ticker is.
Why did they not just change it to Baba?
I don't know.
Very interesting. Dennis, do you got a bid offer situation here in Alibaba? It's got to be offered down, right, with the market? Like
Yeah, it's trading down 1.1%. Pretty tight market, 135.09 to 135.20. So offered down $1.47.
Okay, look at this 135 level here. We've been talking about this for a long, long time here.
Hanger.
What do you think? A little gap fill
Got
here?
a hanger.
I know we're waiting to buy this at the 125, 126 area, but do we go with the reverse philosophy here, short it here and bring it in that 126 area? What do you think?
It's scary. And I was saying yesterday on the show, out of all the momos we put a gun in my head, this is the one that I would buy. But man, you look at this chart. There's a lot of air below here, and that was, an unbelievable, raise of their sales guidance in 2018, and obviously that was, a justified move in my opinion. But again, money's coming out of the momos, so it's going to come out of this too. It's hanging there at 135, starts getting down there. There's just air below, so from a technical perspective, this is ugly. And from a fundamental perspective, I still like it.
All right, talking both sides of the path there. The only thing I want to recognize and point out to our traders is that, you had the big up days in that and the big up move, but you still ended up with 5 red candles, right? So if you're using, using candlesticks over bar charts, there's your representation of, the open versus the close. And even though you did have some big moves and went up 148.29, sellers, we're finding sellers here in the Bobster. Let's see what happens between 125 and 135. I wouldn't want to be wanting to count in that gap.
No, that gap looks scary to me, so I'm not buying it just because of that gap. Technical reasons there. So I still like the Bobster though. Fills the gap. Me and Joe already at the bottom of the gap. I don't know if we're gonna get enough luck there to fill the gap though.
All right.
Jumping back over to the party that we're having here. I just want to talk Five Below from yesterday there because it got hit. And, the fidget spinner craze, and everything. And Kramer's calling it, probably a fad. I'm calling it a fad, too. We talked about it yesterday on the show saying if it takes out 50, look out below. Man, Joel, we got to just start shorting these things. Open rate at 49.93, top rate of 50. I mean, we got to just do it. And
Yeah,
the thing went straight down $2.50. It was
yeah.
hanging there. It's the same thing as the Bobster. I mean, this was hanging. This was just a nice setup yesterday. We were saying takes out 50, it's in trouble. Man, why didn't I short the open?
And that's one of those trades where you just kind of got to put it on and kind of like close your eyes. And the other way to look at it is, if you're waiting for a pop, just think about all the people that are long this thing. All the time it traded between 50 and 54. Let's say you're long at 42, 43, 44. Like I don't know if Larry's in the chat, but he's been buying this for a long time. It opened, it trades in that area, and you're like, I'm out. I missed the 54.13 print. I'm not waiting for this thing to come back to 51 or 52. So when people are, when you're buying stuff off the open and you're looking for a pop, I mean, there's just sellers in there. I mean, just like this thing with Kroger. I mean, we did hit 27 even, but how many institutions, I mean, you've had all this congested buying going up here. How many institutions are like, oh, they cut guidance, I'm out, I'm done, I'm selling my $5 million, and then you get those flushes out. So we'll see what happens, but see if you get the 2-day move. Is 5 below? Have they taken out the low from yesterday yet? Let's take a look. Yesterday's low in the 47.
Hasn't traded today.
Hasn't trade by appointment only there. Okay.
Yeah, I don't think people are thinking, whoa, market's off, let's sell 5 below.
And they could have the opposite theory is like everyone's going to be so broke now with the tech stocks selling off that they'll have to go to the dollar stores and 5 below to buy stuff.
Maybe. Those defensive stocks sometimes are coming to favor. Just not today. Like we were saying, even Dollar General I see trading down here today. So across the board, selling here at least this morning. We don't know if that's going to reverse. I'd be cautious if I'm selling stocks, even like your Walmarts and stuff, because typically these stocks do okay. This morning, I know Walmart's trading down 40 cents even. You're seeing every single stock really get hit here across the board for the most part, at least, the majority of stocks. But I'm just cautious selling even stuff like Procter and Gamble in the whole, because these are the stocks that they typically if they decide that they're not rotating out of stocks, those are the stocks they're going to rotate into.
And also, if you're not inclined,
not 5 below though.
If you're not inclined to short it in the hole or right off the open, you'd be surprised on days like this that. There'll be a pop, right? The buy dippers will come in off the open. At least some point you're going to have like a rally. And sometimes these stocks get within a nickel or, 8-10 cents of the previous day's low. Or I've even seen on occasion where they get up to the closing price. But just for like a nanosecond. Unless you're there, you don't get it. But, let's see. Like GE here is trading down 36 cents.
And GE is not down 36 cents. It's ex-dividend.
Oh,
24. Yeah. So GE is not down much at all. GE
really?
Actually 28.33. So it just closed 28.45. It's only down 12 cents.
Okay, 28.45.
GE is not down much. Has a buy-in balance. Balances just came out. 51,000 buy-in balance too.
Not till you put your order in. Let's see here. Thank you, Dennis. That's a great tip there. I'm looking now. I won't be waiting for 28.70. Well, it could get up there. 28.69 close, adjusted close. People took that home for strictly a dividend play here. Offers at 28.45 and 28.50. So we'll see what happens in shares of GE.
Dennis, do you want to give us some imbalances while you just mentioned GE?
Yeah, you know what? I'm telling you, man, this is interesting. Barrick Gold, ABX, 193,000 sell. I mean, gold is down, so obviously, that's going to be, but it's kind of mind-blowing. Like, if you had just told me yesterday, we're going to be down 17 handles, I'd have been buying gold stocks. And you'd be wrong, because here's Barrick Gold trading down 1.2% here now. It's actually down twice as much as the market. This is a wacky world here today. It's selling stuff, Joel.
All right, Dennis, I'm going to tell you where to put a bid to offset that imbalance, and that
Give me Barrick. It was an ugly candle yesterday, too, for Barrick. It's breaking down.
Couple different 1586 was the low of the move, and sometimes you wish you could like take your thinking and like take it the exact opposite when this thing because gold was rallying like crazy, and I'm looking at this Barrick Gold and I'm like, this thing's just not going. This thing is going absolutely nowhere. So
Yeah.
my thinking was, okay, maybe buy it, for it will catch up with gold. On the other hand, it was weak when gold was strong, and now gold's weak and it's getting murdered. So let's just take a look at the recent low of the move is 1586. But man, below that, you got a lot of air, even down. You fall into the 15 handle. So 1586, that's a level. Where are we trading at right now in ABX? We are trading at 1576 here. I don't know, maybe 1540, Dennis, 1545, something like that might be okay to try and pick some up.
I don't know. It's looking breaking down to me here, and it's kind of, and when I see stuff like this happen, I don't know. Like when gold usually is up on a day like this, and it's getting hit, and everything's getting hit. I'm cautious here. That's all I'll say.
What else? What else we got for
We got
balances?
it.
Which is
Oh,
AVX.
okay, go ahead.
Okay, yeah, I'll just give them quickly, and then I want to get to the shoes because we did have some shoes news there, or actually some news. I saw go by the stream on some sales, but Spencer, maybe you want to hunt that in the background. Bank of America 102,000 to sell, Pfizer 45,000 to sell. Like I said, General Electric slight buying balance of 51,000 to buy. Nike's getting hit 24,000 to sell here too. Full disclosure, I got a short position in Nike.
Yoo-hoo!
Yeah, that's one. Well, I got a lot of positions, so they're all hedged up, so it's not like it's naked short. So that's pretty much it. GIS 48,000 to buy. That's interesting because food is trading down right now with Kroger, so that's actually going the opposite way. AT&T and Verizon both buy imbalances as well. 50,000 to buy. Verizon 77,000 to buy. Those are two stocks that typically actually do okay on a day like this. I'm not sure that's going to be the case though. Spencer?
Dennis, real quickly, John Dodson. Now he talked about Hawaiian Holdings getting killed off of the UA announcement. Now I see a downgrade from Stifel Nicholas at 712.
That was yesterday. Yeah.
So it got hit yesterday. So I don't know what the UA announcement is here, but Stifel moved UA or moved HA yesterday. Yeah, to a straight sell. I'm not seeing the UA news, but to me that was the catalyst for the decline. And then there was one other issue here that was popping up that I wanted to share with you. Or was it the HA? I don't know. Anyways, 833. We got another.
HA got killed yesterday. It was down $5, and the Stiefel downgrade was probably a big catalyst as well because they downgraded to sell.
All
And
right.
Stiefel moved stocks.
Stiefel moves stocks. That should be their. I don't know if they want to be known by
I
that.
saw some sales going by on the shoes, and now I can't find it in my timeline there. I was actually just looking, and I saw some. Was it Adidas maybe? Somebody said something on the shoes. And
Oh,
if
I
you
know
look
what
in
it.
the shoe stores,
Oh, I
you
know what I
it was?
wanted to bring up. Under Armour.
Well, that's what I want to say because Under Armour's down 3%. Nike's getting killed.
I'm looking for your shoe
I believe
sales.
Adidas had some numbers.
I'm looking for it. I don't see anything, but I'm looking right now.
I just saw it go by,
right.
and then I can't find it here now. But I saw, when I'm looking at my Twitter timeline, and I was like, oh, Adidas, and we don't trade it here because it's not traded here on this exchange. So, but I think that might be the catalyst here. Maybe somebody in the chat has my back, but I'm just seeing Under Armour getting killed. I'm seeing Nike get the beats. I think it's off of Adidas numbers, but I'm not 100%. I don't have that verified yet.
I just want to say Under Armour, 8-day rally that coincided with the NBA Finals, right? The Finals ended 2 days ago, 2-day decline. You got that red candle. Follow through with news today. So media events, moving stocks once again. All right, 8:35. We're going to take a quick break here. Spencer, you're going to help me with the break here? Or do you want me to?
Yeah, we got Evan Schnidman. He's the founder and CEO of Prattle Analytics. It's a text analytics company. Their core competency is basically analyzing speeches and cutting through the nonsense. So he's going to tell us what the Fed said yesterday. We'll be right back with Mr. Schnidman.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel, working frantically here behind the glass. And we have Evan Schnidman on the line. He's a founder and CEO of Prattle. Now, Spencer was telling me you got your PhD from Harvard, correct?
Yes, I did.
So you couldn't get in Michigan's PhD school?
My business partner got his PhD at Michigan.
Okay, so that's why you have such a good product. So, anyways, a lot of factors going on here. It just happens to be after the Fed meeting, right? So you can't attribute, or maybe you can, Evan. I'll let you answer that in a second. The decline in the market to what the Fed did, but then you have other macro news with the continued investigation of Trump. So a couple different factors working. But first, let's start what you were expecting to report, what they said, and what the market did or did not like.
Yeah, so going into this FOMC meeting yesterday, we were projecting that this is going to be the lowest score of any rate hike that, of course, has occurred in the last 2 years. So it turned out to be exactly that. So when we score these communications, we normalize those scores around 0. Most of them are bounded between -2 and +2. And going into this meeting, sentiment was actually pretty neutral. It was almost right at 0. And so it was really about market pricing more than anything that drove them really towards this hike. And
wait,
so
Evan, can I interrupt you? What exactly does the score mean?
Yeah, the score represents essentially how hawkish or dovish each communication is. So we actually natively construct a unique lexicon designed specifically for the Fed. We also cover 14 other central banks around the world and just shy of 4,000 individual companies as well. So the lexicon specifically designed for the Fed was showing us that recent communications were trending pretty neutral. And so what that means is not really all that hawkish. And in fact, what the story we were seeing was, the doves were saying, well, we're not going to stand in the way of a hike. And the hawks were saying, yeah, I guess we kind of want to hike. And so it really meant there was this clustering of communications right around the neutral bound. It wasn't a lot of people being really hawkish or a lot of people being really dovish. It was really just sort of this tight cluster. So they hiked rates. They, not surprisingly, had a pretty neutral communication in both the FOMC statement and Janet Yellen's press conference afterwards. And the highlight from the press conference, and frankly the highlight from the secondary communication, not the FOMC statement, was the talk about unwinding the balance sheet. So now I think the big question is going to be timing on that, less so about timing on the next rate hike.
All right. So how about the market, the financials? What was your interpretation of the market? I mean, the financials, when the tech was getting killed on Friday, they rallied the financials in anticipation of this rate hike and maybe continued rate hikes. They sold off ahead of it, rallied with it here. Give us the implications, because really, what sector is affected more by interest rates going up and down than the financial sector?
Yeah, so I mean, the story with rising rates actually being good for financials is always a funny one, but it's essentially that they can, when you go and get a mortgage, they can charge you a little bit more if interest rates are at if the Fed funds rate's at 3% and they're giving you a 5.5% mortgage, they can round that up to 5 3/4. You're not going to know the difference. But if interest rates are near 0 and they're giving you a 3.5% mortgage, 0.25% is those 25 basis points you're going to notice. And so really it compresses their margin if rates are lower. So higher rates actually are good for them in some sense. It just gives them more flexibility. And so I think that's what you're seeing a little bit there is, okay, confirmation, we got the hike we wanted, and oh wait, they're going to unwind the balance sheet. No one's really sure if that's good or not for financials. Frankly, it probably won't affect them all that much. But at this moment in time, the question is, what's the rate path? And I think there was a lot of people going into the meeting yesterday that were concerned the Fed was going to lower the rate path. They were not going to hike rates as quickly, and they basically left it the same. So I think those.
But you know what? I don't know if they really. I mean, they really said that. I was listening to some of the testimony there, and I mean, she didn't use the data dependent term, but she said, we will reevaluate, as things go forward. But one question I've had, and perhaps you can answer, you talk about rates going up and how good it's going to be for the banking stocks. And could you just talk about, I mean, because I see these rates going up just incrementally and not sure how it actually flows back to the bottom line. Yeah, they can charge a little bit more on their loans, but just where's the incremental profits to the banks, even with these such small bump in interest rates?
To be honest, it's marginal. It's not a huge amount, right? I wish I could tell you that there was going to be a big bump in profits coming out of this. Rates are still extraordinarily low by historical standards. The rate path is very slow. We're talking about maybe one more hike this year. So I actually think that the underlying strength of the banking stocks has got to be coming from somewhere else. It's not coming from Fed policy.
We're on the line with Evan Schnidman, founder and CEO of Prattle. His company is a text analytics company, combines deep domain expertise and cutting text analysis techniques. Could you just talk about that a little bit? Like, how soon after the report are you spitting out information to your customers?
Yeah, so essentially within a minute, we're able to pull down that communication, pre-process it, process it, analyze it, and issue a score. All of this is done purely algorithmically. So not only do we have our API that people can plug into, but we also have a front-end user interface that also provides push notifications. So if you want an email alert saying, Janet Yellen gave a speech and it scored 1.2, right? That'll show up right in your inbox and provide some metadata context as well. Our newest product we'll be launching in September is we are analyzing corporate communications the very same way. So right now we're covering just shy of 4,000 corporations, every corporate earnings call. So same methodology, really having a unique lexicon for each and every company. So that means right now we have just shy of 4,000 unique lexicons.
Wait, so Evan, what is the scale with which you're measuring the negative?
So for the corporations, it's essentially tied to cumulative abnormal returns. So essentially looking at CAR, right? And so what we're doing there is identifying what is normal language for a earnings call, and showing how the language on this particular call deviated positive or negative in relation to how the markets have previously responded to prior communications. So if the market responded as though a prior earnings call was positive, and you have a new earnings call comes out that's substantially similar, it's also likely to elicit a positive market response. And so we've actually built essentially a pattern recognition system that identifies how language today compares to prior language.
Also, I just want to ask you, other central banks here, Draghi moves the markets, and what's going on overseas. I mean, the chaos that we've had going on in England as well. Just give us your sense of the other central banks, Europe, what direction they're moving in. Because to me, it seems like if we're constantly raising rates and other countries are lowering rates, there's really going to be a disconnect there. Could you give us some comments on other central banks?
Absolutely, yeah. So there's two stories going on here. So one of them, you probably noted the Bank of England held rates this morning. And they held rates as everybody anticipated. I think the interesting piece was that they had three dissenters, all of whom were in favor of a hike. So Kristen Forbes, who's been leading the charge for a hike at the Bank of England, but mostly based on inflation data, she's actually, this is her last time voting on the committee. So it'll be interesting to see if that more hawkish coalition breaks up afterwards. But right now, it is looking like the Bank of England might join the Fed in moving towards a rate hike, but their justification is very different than ours. The Fed has largely been hiking rates despite inflation, not because of it, right? Inflation's still below target. And so the fact that the Fed is unique in having a dual mandate, paying attention to labor markets as opposed to paying attention to just inflation, means the Fed has a reason to hike because the labor market's doing pretty well. With a lot of those central banks around the world, they're single mandate. They're focused only on inflation, and inflation's persistently low pretty much everywhere. So keeping low rates for the foreseeable future in most of the developed world is pretty much the new normal.
One other question for you here, and I know that you get other data from the government, even though the unemployment number doesn't really move the market. I think it was on Monday. I don't know if it was some retail sales figures that were kind of punk. I can't remember, or it was a CPI, but they immediately hit the banks. And the market got hit a little bit too. The market ended up ignoring it, and I think someone in our chat, I can't remember who it was, is that bumping up rates into a deflationary period, if we're actually in that. They're calling for inflation, but if prices are going down, to me, it's nonsense. I mean, isn't that kind of just a recipe for overall disaster in the markets?
It's an interesting question. Yeah, so inflation missed. The expectations were that it was going to hold steady or continue to rise, and actually fell a little bit. Some of the reasons why this is potentially problematic. Everybody expects at this point there's going to be some residual seasonality in the numbers, and that Q1, because of the winter, we're going to see low inflation, and then it's going to rebound in Q2. We're not seeing that rebound this year. And so that rebound, the lack of that rebound does raise some red flags, and hiking in the face of below target inflation is questionable, with the caveat that it seems to not be affecting financial markets, right? The stock market's still near all-time highs. So the market doesn't seem to care at the moment that we're below target inflation.
All right. If you want to learn more about Evan's Prattle's analytics and how they're interpreting different central bank meetings, you can find all that at Prattle.co. That's correct, right? Prattle.co is the name of the site. I got that right?
Yes, it's Prattle.co.
Just making sure I got that right. All right. Evan Schnidman, founder and CEO of Prattle. Thanks so much for hopping on today. We'll definitely have you on next time the Fed raises rates.
Thanks, Evan.
All right. Thank you, guys.
All right, 8:48 now. How we doing, Joel?
We're doing okay here. I think Dennis is in a fast market here. So
I have too many positions on. I've actually got down to 28 positions.
How do you do that? How in the hell do you do that?
Well, 29 actually. I got 29 actually. I didn't add them up right.
Do you have one of your algorithms going that like every time you buy something, it or try and sell it, it buys it? Are you sure you don't have any? I just don't know how you manage 29. I think even when
these are overnight trades. See, this is stuff I will be out of probably near the open at 9:30. So this isn't like my portfolio. My portfolio, I think I got about 100 stocks in there. That's my investment portfolio, completely separate. This is my trading overnight portfolio. So just doing hedging, just doing different tactics. I basically do a lot of correlated pairs trading. Looking at relationships when some stocks are down 3%, others down 2%. I think they're related. I think there's a statistical arbitrage opportunity there. So I just trade all the stocks against each other, and basically not caring where they go because I'm staying market neutral overall. Just caring about the relationship between the stocks.
I think even when I was trading my most at Bright, I think if I had 4 or 5, maybe 6 stocks on it the most, they were, maybe they're too big of positions and stuff. But I absolutely don't. I mean, how many montages do you have up to covered?
No, just looking at the P&Ls really to monitor them. So as they start going under, you can see them updated. But, like 28 is actually, I would say on an average overnight, because I do a lot of overnight trading, I probably got about 20 to 30 positions. Not lately because it's been quiet. But, I'd say I'm usually 15 to 20 in this market, but going back to we had volatility back in 2008, 2009, 2010. It wasn't out of the norm for me to have 200 overnight positions, 200 different stocks. Maybe 100 long, 100 short, trading them all. Actually, back then I was more short just because we were in a financial crisis. I always wanted to be net short by the end of the day because we always opened down the next day. But, it's just the market we're in is quiet. So, I don't have quite as many trades. But, yeah. I've always just traded a lot of, I'm trading relationships though. So, and any pairs traders out there, other Bright traders are listening to this, probably have even more trades on than that because you're trading the relationships there. You're not trading market. You're trading market neutral is what you're trading.
All right, and you're going to try and put more on the open?
I will. I will try to, if some stocks open too high, obviously I'll be trying to short those. Some stocks open too low, I'll be trying to buy those, and that's relative to my own fair value calculations. Like just, a hypothetical example. Let's say, your average bank is opening down 1.5%. If Bank of America only opened down 0.5%, I would try to short that. So, and I throw those out with OPG orders, which we've talked about before, which is opening only orders. If you're doing NASDAQ stocks, you do limit on open orders, LOO orders.
All right.
So, and you're just talking about those relationships. That's, you're just looking at, well, this bank is opening too high relative to the other banks, and you're hoping that that relationship is going to close. Sometimes it does, sometimes it doesn't. Usually when it doesn't, you probably missed a piece of news, and then you're underwater. So that's why you really got to know the news as well. You got to have your Benzinga Pro up there so you know what's going on.
Financials are holding up, though, a little bit on a relative basis here. You have the SPOOs down 0.6%. Bank America, no, maybe not Bank America is getting hit. No, it's down 1%. But I'm just looking at the close. I mean, you get Bank America near the close there, and I think it could be a decent trade. So there weren't much earnings stocks. We've covered it. Balance has changed much at all. Is that AVX imbalance still there?
166,000 to sell. Yeah, it's still there, and it's still trading down 22 cents. And your gold is still trading down here. Wacky world, because I could say, a lot of people who have gold on as defense in their portfolios, like, why is the defense not working today? I don't know. It's one of those days where a lot of things are just trading in the red.
All right. If there's any stocks in the chat that you would like us to cover, please throw them in there. We're glad to do it.
Let's talk Under Armour here. I hinted on that before. It wasn't sales. It was just some updated numbers from a couple of analysts. Susquehanna and both Credit Suisse were commenting. Credit Suisse, I believe, reiterated their underperform on it. Susquehanna wasn't saying good comments about Under Armour either. So you got a couple analysts, not actual ratings changes here, just commentary here, but not helping UA. UA trading down 3% in the pre-market.
Yeah, and Credit Suisse maintained a $17 price target.
Yeah, so they don't like that. They were hoping Credit Suisse changed their mind after the NBA Finals, and they obviously didn't.
All right, let's also talk here on days like this. There's the high flyers, which have a lot of froth in them, but there's also beaten down stocks, right? That have taken their bloodbath. Defensive stocks too. Can we just highlight 4 or 5 of these defensive stocks and see if the money, because the money's going to flow out, right? If they're going to go from somewhere, they're going to go to somewhere else. Any defensive stocks that you'd like to take a look at?
Well, that's what we were saying. And I do see Coke. Coke just went green finally. It's the kind of stock you would think would be okay in this environment. Again, your Kroger, Joel's just crashing. Good, you got to get out there and trade your Kroger. Get out there on that open and get ready, Joel, because it's down $4 here now. And I look at that and I just think, normally I would go and buy food stocks today because usually those are defensive. GIS actually has a 49,000 share buy balance. I'm running a little bit scared here though because of the Kroger numbers. Maybe they're going to go into stocks like GIS like they normally do, but with Kroger down 13% here now, I'm scared to buy food. So, I would say normally Coke as well, but they do sell Coke in Kroger. So I'm just a little bit cautious here on my normal strategy would be to bid food, bid stocks like Coke, Pepsi, bid stocks like AT&T and Verizon. If they open down, usually they come and they go green. Bid the utilities, but the TLT is trading down slightly here today. Those are usually the stocks that do better, but even the XLU is trading down here this morning. So I don't know. It's kind of a weird pre-market, which has me playing the caution. I'm playing more cautious here this morning because it's something we haven't seen in a while.
Jared mentions Twitter here, and a couple different things here. Just not a great move here, and in an up market really over the last couple of weeks it's went down. I will tell you, if you just want to wait and buy it on strength, wait for this thing to get over 17 and a quarter, 3 highs right in that area. On the downside, if you want to just stick your neck out there and try and get hit on a lower bid, 16.27. That was your low on Monday, so that's a potential area of support. The only thing that that's bothering me a little bit about this is, we might get down to 16 and hang out at 16 here. You had a double bottom after the earnings report at 15.80 to 15.76. But after that, you're looking at a gap fill down to 14.96. So the propensity, for these stocks, if you're patient enough, they go back and fill the gaps. I don't know if we're going to see Twitter back here at $15, but that's the only reason I'm just not sticking a lone bid out there at 16.27. Maybe at 16, because you had the double bottom there ahead of earnings. But that's my my take on Twitter. And Jar, do you want to make some comments on Twitter?
I was going to say trend is not your friend here. I mean, it took out that 18 until this stock starts to show me something and get back up over 18 on a longer time scale. This is one that has potential to eventually be back at $15 again, $14. Yep. I mean, it had the little run up. People get excited again. Oh, maybe somebody's going to buy them. That's maybe not going to materialize here. They were thinking, oh, they're figuring it out. It's like everybody, the talks, and the media, maybe we're doing the same thing. I don't know. But, when the stock was up at 19, everybody's loving it. And they're saying they're finally figuring it out. Now they don't even talk about it. It's like everybody talks about the same damn stocks, the ones that are going up. When they stop going down, they just stop talking about it. So it's such a momentum market. It's so hard to fight once the ball gets going in the other direction. And right now, the direction is down for Twitter.
Amberilla, AMBA, we're getting asked about that right now. Boy, oh boy.
Ugly.
Should they getting whacked further here? I just want to look.
Oh, yeah, Joe. We're down another buck here. We're down 2.1% here. Offered down there 48.5. But look at this. Is this not just the craziest market that how many days were we up in April and the beginning of May? It's like 2/3 of the candles, maybe even 3/4 of them are green. Now 3/4 of them are red. When the ball starts going the other direction, it keeps going. It's just a momentum market. I'm going to keep saying it.
I would hold out for 46.80. That was the low of the move. If you want to buy it on strength, I see a triple top just below 52. So maybe some sustained closes over 52. But right now, the low of the move at 46.80, and stock was just knocking on the door at 66 not too long ago. Valentina hopping in the chat here with Kim. And I don't know what this stock is here. Kimco Realty Corp.
Kim Realty. It's a REIT. This is a stock that should do okay on a day like this. But again, even the REITs here, I don't know. It's a day they're selling everything. So I'm cautious here too. Tape's been up. It's been looking a little bit better. Sometimes your REITs actually perform better on down days because money's flowing into dividends. Although this one's a lower dividend, 1.4%. I usually like the REITs that pay me 4 or 5%, but this isn't one that I really follow closely. I just looked at the dividend. It looks pretty low. But that being said, REITs usually benefit, when the market starts selling off, or at least the financials start selling off. But TLT is not up today. So I'm cautious here too.
Double top. Keep an eye on 1963, 1965. That is the high of the last 2 days. So if you're looking to buy on strength here, that could be an area. On the downside, yesterday's low, 1914, 2-day low, 1896. So if you want to pick it up on the cheap, maybe the $19 area, I think you're buying this more for the dividend than the price appreciation. Ace is asking about Pandora. Supposedly getting taken over at $8. No, sir. $7.48. I think we have the all-time low at, let's go to the weeklies here if we can find it, at $7.10. So maybe if you're holding out for that area to cover a short here in Pandora. But all the news that was out on that thing the last couple of weeks, did it seem to make a difference?
On Pandora, though, I did see that Spotify came out today and said that their users are up 11% year over year. So that could be a catalyst. Pandora moving in sympathy with Spotify, of course, not public, but 11% user growth. That's paid and non-paid users year over year from Spotify. So that could be something to watch out for if you're watching Pandora. Okay, that is our show for the day. Hope you enjoyed it. I hope you enjoyed our chat with Evan Schnidman at Prattle Analytics. Don't forget about Benzinger Pro. Be the first to know. Trade faster, trade smarter with Benzinger Pro. You can also like us on Facebook, facebook.com/Benzinga. Get notifications when we go live, which we think we may have had some problems with the Facebook Live today, but we'll get that worked out for tomorrow. I promise you that. So we're on Facebook, we're on YouTube, we're on PreMarketPrep.com, we're on our podcast, on iTunes, SoundCloud, and Stitcher. So PreMarket Prep is everywhere. We're taking over your life. You cannot avoid us. That is our show for the day. Please remember that all the information, material, and content on our show is for informational purposes only and not meant to be investing advice. Have a good rest of your Thursday. We'll see you folks tomorrow for our guest Kyle Dennis. He's a biotech trader. Have a good one, everyone.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.